and we're talking about American Homes for Rent, AMH is the ticker. Isn't that the whole business model that Wall Street pays them for? I mean, that's what they're doing, right? They're raising money to do what everybody knows that they do, and they do it well.
That's right. And the market's giving them credit for really attractive economics on their product type in the form of a good cost of capital. And so, when you have that cost of capital, you need to go out and flex it. And so that's what they're doing. And effectively, you're trading 1 day's worth of dilution today for, accretive earnings growth throughout the year and beyond, and also accretion to value. So look, the stock will be down 4 or 5% today, something like that. But it's the same deal as last May where
it might be on the open. I mean, just so people know how that works. I mean, first of all, everybody's shitting their pants about interest rates rising. So any rate sensitive stock, obviously a REIT would apply. It trades there because that's where the block gets priced by Wall Street. Wall Street wants their clients to get paid. So they put it down there so that everybody who bought the deal gets paid when it goes back up. So you, the individual investor or family office investor on AMH, I mean, I don't know what your size is, but it's a hell of a lot smaller than Citadel trying to buy AMH on the open. And by the way, they probably already bought the deal anyway. So, if you're right on the fundamentals, you don't have more than, I'd say 40 to 80 minutes to buy this stock on the low on the open.
Yep. Yeah. And then look, I mean, it just, if you work through the math, it just adds fuel to the fire, which is our thesis that, numbers in general are too low. They're actually accelerating to the upside, given the degree of leasing momentum and the tightness in their portfolio. And effectively what they're doing is they're adding additional earnings, future earnings by selling this deal and building out. So it's kind of a, it's deceptive at the open, but it's actually a very attractive proposition. And Keith, we had Mike Taylor on last night in our Twitter Spaces, and we were talking about this. It was great. He dropped in and we had a really nice conversation. When we went through the math, he's like, "Oh God, you do that all day, right? Like that's what you should be doing if you're a real estate owner." And so it makes a lot of economic sense. We're still ahead of the street. I think it's one of my favorite longs. It's staying there in my mind. And that's all for me. I just wanted to touch on that this morning.
Yeah, this is why the call's live. I mean, if you can buy it in the pre-market, if you can buy 50 shares, I mean, if whatever your PA size is, go for it. I mean, this is how you pick off the old wall. This is why we're doing it. Okay. And again, I challenge you, if you work on new wall, to augment your process with this. The game's changing here. More people understand how to play it. And if you could play it, like I said, in smaller share counts, there aren't many opens where this is a top 10 long at Hedgeye right now in terms of signal strength. So I don't know how many days in the year we're going to be able to have a specific discussion on timing like this with Rob's full conviction behind it. And it's not a feeling. We're not watching billions here. This is the game. Okay. This is actually how it happens. I don't need him to be certain. Does he look certain? Yeah, I think he looks like how Rob always looks. Yankees fan, fully loaded. All right. Thank you, sir. Appreciate that.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.